Hi, everyone, and welcome. I think we can start now. It's 5 minutes after 10. Those that are yet to join can continue to join, and then they'll just find us halfway through what we are already doing. I just really want to welcome you all and thank you all for making the time to come onto this webinar. And I just want to give you a little bit of a background of who Andisani International Consulting is. We are a consulting company that is really passionate about helping small to medium enterprises grow and succeed in their craft. We provide hands-on mentoring, coaching, and strategic advice, which is really designed to um, meet the real needs of SMEs in South Africa, given the challenges we all know that there are unique challenges that come with businesses in Africa, especially. And through ESD programs that we partner on with corporates, we also try to create opportunities that drive inclusive growth and transformation for the SMEs that we serve. Our vision is quite simple, yet powerful, we believe. And it is to be a catalyst for business excellence, for innovation, and most of all, for sustainable growth. And we want to help SMEs not just to survive, but to really thrive and make a meaningful impact in the economy. And this has been the motivation for us offering these free webinars to you as we have been bringing them. I think some of you will have been on the one that we held 2 weeks ago, which was on how to develop and implement a winning strategy. And we are going to be having these every fortnight. This week, we are talking about how to be funding ready. So, on the call, if I can just say, I do have the Andisani team. They will be um, able to see if you guys have put your hand up. You need to ask something. There's something really pressing. I am going to give you quite a lot of time at the end for you to ask questions. But if you do feel you need to ask a question somewhere along the line, please just raise your hand and we will open your mic and let you speak. And also, I think we have deliberately not given you the power to open or close your mic because we do know that's halfway through sometimes, you know, a button gets pressed and we get to hear all what's being said on the other side, just so we don't disturb other people. Alrighty, so with all of that out of the way, let's get into it. I'm just going to quickly share my screen. My name is Chipo Chipidza. I didn't introduce myself. My apologies. I am a certified business advisor. I am one of the directors for Andisani International, and I like to think that, I have been instrumental in making things work for SMEs and corporates alike. Been in both corporate and and in business for just over 30 years, and I'd like to think that I have amassed quite a bit of experience in that time, and I do have a story to tell, and I can assist other SMEs avoid um, mistakes that I know can happen on the way. But closer to home, in particular, focus to what we are talking about today, which is funding readiness. I have been instrumental in assisting quite a number of SMEs through Andisani, and we have been able to get a number of SMEs become funding ready, and then also have those funds deployed to them. And we've assisted SMEs to actually manage the process of um, spending those funds and allocating them correctly and appropriately. So let's talk. Let me take you through what we are about today. Just going to quickly share this to sound, share the screen. Okay. So if we all can see the screen, please just give me a thumbs up and I will see the thumbs up all coming onto my screen here. Fantastic. Right. So here's what we're going to talk about today. We're going to talk about what it means to be funding ready. We're going to talk about why funders reject applications. And I'm sure a lot of you have been really wanting to know, why is it that every time that I send through an application, it comes back as rejected? What are the things that I can do to get it right the first time? We will talk about that. What the funders look for, which is really a follow on that. The types of funding and sources that are available for you, and how you can actually tap into those. I've singled out purchase order funding because I know it's something that is really paramount in a lot of SMEs, in the life of an SME. We get these big orders because we are daring, because we are pansula like that. We go and we pitch for those big orders, right? Not knowing when the money's gonna come from, but you don't want to leave out an opportunity, right? So you go in there, you say you can do this work, and then the order comes, and then you think, my goodness, where am I going to get the money to actually supply this order? So PO funding is something that really is something that we need to talk about. So I'll talk you through just a little bit of how you can approach it and what it entails. A few tips on how to stand out when pitching, and also at the end of it, I'm going to just screen a little bit of a case study, and then of course we will have the questions and answers. So the full extent of this webinar is 1.5 hours. I'm hoping to leave at least about 15 to 20 minutes at the end so that you can ask as many questions as you want to. That's something that I'm really going to want to do. Okay. So what is funding readiness? I think it's very important to understand that when we talk about funding readiness, we are talking about your business being able to tick the boxes that are always being asked about by funders. And these are the things that you need to look at. The first thing, your business has to have a strategy, right? And I'm talking about just generally, you should be having that. Business strategy is the blueprint of the company, right? The blueprint is like an architect's someone who wants to build a home goes to an architect and says, this is the vision I have. Now, I was talking about the business strategy being a blueprint of the company, and often people get confused the difference between a business strategy and what a business model is. So the business strategy is the overview of how a business intends to use or to really do business within an environment, and how it intends to use certain um, uh, attributes that they have to be able to advance the requirements of what they are about. How are they going to meet the needs of the customers, etc., etc. We spoke about this at length of how to actually develop that 2 weeks ago. Now, a business model is then a modus operandi. How are we actually going to deliver the goods to to the client? Who is going to be our target market? What mode is it going to take of us actually delivering to the client? So it's typically what would happen is, once you've actually put together a business strategy, you then can create different business models to test that strategy in going to the market. And along the way, what can happen is a company can pivot and decide, okay, this isn't working. And usually that comes from the feedback that you get from your clients, or you watch what your competitors are doing, or you see what the macro environment looks like, and then you pivot on the model, you change it to suit what should be happening at that time. So I hope that is clear between what a business strategy is and what a business model is. Both very important in articulating to your funder, because they want to know when they give you this money, how are you going to use it? What do they need to buy into the strategy, they need to buy into the model and believe that the model you've chosen is in fact the right one for you to actually succeed. Then you need to have your operations down pat. We know that nothing is perfect, right? But at least have systems in place, right? If I come into the business, I would want to see if you actually do have an operational system, right? An operations manual. I'm going to take off the top of my head, let's say you are an automotive company. You're a company that belongs to the RMI. You're a company that takes cars, fixes them, repairs them, sends them back to the client, etc. Right. Now, the operations of that business would entail you at least having an operation system that looks at how do you check in the cars, how do you generate job cards, how do you then ensure that quality is managed at every stage, so that when the car is then released to the client, it is in the state that it's supposed to. You've fixed the things that were supposed to be fixed, and you haven't damaged anything else, right? Those checks and balances, and how does that then filter through to your invoicing system, and how does it come through to out the other end? So that whole operations system needs to be in place, needs to be visible if you're a business that is really serious about what you want to do and how you want to portray yourself to your funders, right? The operations can also mean the kind of people that you have brought into the fold, right? Are you in a place where you brought in the right people to execute the different functions that are key to that business being able to run properly? Very, very important. That's going to really make that's really going to make your funder buy into what you're doing, right? I can never overemphasize this. Your finances, which really talks about financial management. There's a whole lot we can talk about that. So finances can be quite broad. So are you actually making money at the moment? Sometimes it may be a no, but you do have potential, and you would have to articulate how that potential is looking like, because very often you can actually get funding based on your balance sheet, right? The equity or the value that you have sitting in your balance sheet can actually afford you the funding that you require, not so much maybe the profit and loss that you're making. It's actually usually it is well, I always say the lazy funders will always want to look at only whether you've been actually making money, and and what are the cost of sales, and are you actually clearing your expenses, and how are you managing that, etc., and not look at anything else. And so if you are recording a negative outlook, then they're very reluctant to give you to advance you any money. But then that means certain companies, like how Amazon started, would never have been able to make it, because they often quite a few of them often start on a negative cash flow outlook. But the balance sheet that they have in their possession does move them forward. It For those funders that are willing to take the risk and walk the road with you, then that becomes something that they are attracted to. So very often it's very good to be very clear about those aspects of your business. And I always encourage people to have someone who's actually managing your finances. Get a really good accountant. You can get them outsourced if you can't bring them in, because it can be expensive to have someone in-house because you're still small, you're still building. But try to get someone. You can get anyone from as little as, unfortunately, because it's a professional service, you're looking at anything between 2 grand to maybe 5 to 7 thousand, depending on your size, per month as a stipend. I call it it's not stipend, it's an amount that you pay every month for a certain number of things that have to be delivered every month, and agree on that upfront with your accountant. An SLA agreement, right? An SLA needs to be in place. So for this amount, I'm going to do your management accounts. I'm going to do your annual financial statements every year. I'm going to submit your VAT every second month. I'm going to calculate your pay. Some of them will even do your payroll. I will make sure that your UIF is taken care of, your income tax for the company is taken care of. I will make so all of that stuff needs to be looked at. Have it listed so that you know what to expect, you know what to hold him or her to account for. And there's quite a few of them, but make sure, please, folks, the accountant that you are engaging must be someone is who is actually accredited. There are quite a few of these, the CIPA, CYBA, CICA, and quite a few others as well that um, produce really good accountants, and they must have a practice number. So at least you can hold them, you can hold the body to account, right? Financial management, you must show some kind of discipline with your funds. Why am I saying this? You don't want when you give, because very often your funders will ask you to send them copies of your bank statements, your management accounts, and your annual financial statements. It must show in there that you actually do have financial discipline. Separate your personal from your business life. You don't want to be going, if you're a lady, I saw quite a few ladies on the call, don't go to the nail bar and use your business account, right? And use your business card. Don't go to, maybe you've had a really bad time, you need to, invite the girls out for lunch and so on, and you use that, for lunch. Perhaps you can get away with it and call it a business lunch, maybe. But certainly it will show when you are always swiping it for the McDonald's because the kids are always bothering you for money. They want to go to the McDonald's, whatever, whatever. That's a definite no-no. Pay yourself a salary. Very important. We always neglect to do that as entrepreneurs. Pay yourself a salary. When you get to the end of that salary, wait for payday. Don't dip into the business account, because that's a really, really bad idea. It will show and it will reflect on how you are going to handle the funds that are going to be dispersed to you if you should get a loan. So please be very, very strict with that for yourself. And just generally, financial management also means, how are you dealing with your expenses, your business expenses, vis-a-vis the revenue that comes in? Are you spending more than you bring in? And if you're spending more, why? Um, and sometimes also, not spending can also work against you. So if you do have a pool that is visible, you have money, and you are not spending on getting more business, i.e., spending on maybe digital marketing, spending on a really good system that can bring you a notch above your competitors, that can be a question that can be asked. So manage your finances in the way that it works for the business and it enhances the business and makes sure that the business is in a place where if you need to borrow more money, it's a tick, right? For other stuff that we can talk about, financial management, there's a whole lot of things that we can talk about. I'll be happy to answer some of those questions if you have any at the end of the webinar. Compliance. I cannot again overemphasize this. Compliance will involve things like your COIDA, like I said, your UIF. Are you CIPC registered? And if you're a PTY limited, there's certain statutory requirements. There's issues around audited financials, the number of times you should actually meet as directors, all of that company secretarial stuff that comes in. It sounds like a mammoth thing to do, but remember, it doesn't. The law, the Companies Act, applies to all companies that are registered at the CIPC. No matter whether you are an SME or a big corporate, the law is the same. There isn't a separate law for SMEs. The law is the same. You have to abide by it. And all lenders who actually are registered are required to check these things and make sure that you check out. Otherwise, they lose their license. It's one of the things that they have to do as part of their due diligence. And if your compliance is not there, you are actually not going to be considered. Other factors that also come in about you being funding ready is you need to make sure that you actually have some sort of market validation, right? What do you mean by this? Have you got paying customers? Can you prove that your concept works? Are you able to give us enough data to say, if we calculate this in a forecast, what you're talking about as future revenue and profits actually does make sense? Very important. If you don't have paying customers, some funders are very happy to receive letters of intent. Um, it must be noted, though, that a letter of intent is not a contract. The person that is giving you the letter of intent is not obliged to buy from you once you start the business or once you bring the product or once you start making the excuse me, the service available. But it's a show of appreciating the fact that the service that you are providing or the product that you are going to provide, whether it's a service or product, is something that they need and they would be very willing to utilize. Very important. Some funders are happy to go with that. And then you need to also look at, if you're a business that has been in operation for, say, 12 to 24 months, you have to also show some sort of user traction, right? You need to show that you have been growing. Remember what they talk about, having skin in the game. What efforts have you made to actually make sure that this business grows from just 5 clients to maybe 25 clients? And in what space of time? And then that helps them to calculate and understand whether what you're proposing is in fact viable. Very important. Okay. And last, but certainly not the least, there needs to be credible leadership in the business, starting from you as the owner slash founder, right, of this business. You need to show some credibility. You may not have the academic papers or credentials to back your qualifications or whatever it is that you think that you are saying you can do, but certainly make sure that with all the work that you've done, right? If it's work that requires you to have some sort of an accreditation, you have that accreditation. You need to also have customer um, references. Testimonials are very, very important. Make sure that every time that you deliver a service, you've got a reference from that client that says, we've had experience of this person, they know what they're doing, we'd vouch for them to actually do this work for other people. Very important, because as you do that, you're building a portfolio. If it's products that you have, make sure you're on Google. What do you call it, on Google? There's reviews on Google. Make sure people go there. Google My Business is a really good vehicle. Make sure people go there and they talk about your product. You have a really good rating. Often people shop based on that. They go to your review. If they see you're a 2.5 star, they steer clear of you. But if you're 4.5, 5, that's who they're going with, right? How many of us have actually gone through that process where when you're actually looking for a service provider, you look at their review? I think it's something that's really real. Very important. Make sure that people review you and you are as visible as possible. Very important, folks. So now that we've talked about what it means to be funding ready, I want to talk to you about why funders reject applications. This is something that people have always complained about. 2 seconds. Sorry. People always complain about, I wish funders could come and tell us what it is that I have done. Why have I not been approved? Where have I gone wrong? Very often, this information is not available. So here's the lowdown. Incomplete documentation. SMEs are notorious for this, right? We send in what we can, not what we need to send in very often. And excuse me, there's usually this mentality of, because I'm a small business, they will understand that I actually don't have the stuff that they're asking for. No. If it's asked for and if it's required, you have to provide it. If you can't provide it, it is always better to ask for a concession not to supply it. And you have to have a really good reason why you can't supply it, because often it is expected that whatever they're asking for, you have. And if you don't have it, then that's always a question to ask for them, right? Missing financials, also very important. You need to look at, usually funders want to date back at least 2 to 3 years. And then, of course, you forecast another 2 to 3 years ahead. So they want to see the history. They want to look at how long you've been in the business. And they also want to look at going forward. For a business that perhaps has just been in circulation for 12 months, funders will understand, because there are funds that say you only have to have been in business for 12 months, so they will know that you don't have data dating back as far as 24 to 36 months. But what they will require you to have is management accounts, right? Very often we overlook these, and that's circling back to the accountant. That's why you need to have that guy or that lady in place to say, every month, this is how we've done, this is how our expenses have performed, this is how our assets have really performed for us, and these are the things you need to take note of. Always have a budget that you forecast on, and if you don't have a budget, then it really means you don't have any direction. You need to be registered if you are belonging to some kind of, well, whatever industry you're in. If you're in construction, there's NHBRC for those that are home builders. There is CIDB and quite a few of those things that you have to be registered for. If you're an artisan, let's say you are someone who belongs to who does electrical work, you got to have a wireman's license. You've got to, if you're doing solar installations, you've got what they call the green, I think it's called the green card or something like that. All of those things need to be in place for you to actually be taken seriously. If you are a person that provides a service, a professional service, if you're an accountant, you need to have a practice number. If you are a business mentor, advisor / coach, you need to have the commensurate certification and accreditation, and all sorts of different other things. If you're in the food business, there's a whole plethora of things that you have to comply with. SAB approved, you need to have certificate of whatever. All of those things need to be in place. Compliance documents, I think we really talked about that. Very often these are missing, and that has always been a pain point for funders. They don't understand why SMEs expect to even be taken seriously if they don't include compliance documents. And this does happen. I know it might seem a bit odd for some of you. How can someone submit something without compliance docs? But it does happen. Just submitting with a request, right? A request letter that says, this is what we want to do, please give us money, is not enough, guys. You've got to have a business plan. It must show where you are coming from. It shows that you've actually done your research. It shows that you are actually aware of what your strengths, your weaknesses, the opportunities that are available, and the threats are in the environment you want to get into, or the one that you are actually operating in. It shows that you've actually taken time to think about who you are, where you are, what you're about, and what you want to do and where you want to go. A business plan will also look at operations, it will look at marketing, it will look at finance, and all the very key things that need to be spoken about. How are you going to achieve the sales that you are saying will happen, right? That will be contained in your business plan. Without that, funders won't be able to help you. When you present the business case, right? For those that do actually remember to include a business plan and they have a business case, very often it's a very weak one, because it's based on very superficial facts, right? Very superficial. There isn't any in-depth thought. There isn't any understanding of what can actually be a compelling business plan. You are not even clear of what your unique value proposition is. You're basically just taking the example of other people on the market and transposing that onto your business to say, so and so has done well, we could also do well. But what you haven't done is you haven't clearly defined how you being in the running together with a competitor is going to actually affect how you do business. How are you going to stand out? What's your value proposition? Why would I fund you and not fund the next guy that's coming after you? What is it that is what they call the silver bullet that you have that the others don't? Very, very important for you to make very clear. Also, not very clear on what your business model is. It's all over the place. You haven't been able to really articulate how you actually make money, right? Are you B2B? Are you B2C? Are you wholesale? Are you retail? And are you working through agencies to get the work that you got? Is the model going straight to the consumer, to the end user? How are you actually making, or is it a combination of all of these? How is it that you are making money? Also, a very low market traction can deter funders. If you're telling me that you've been able to attract 5 clients, really good clients in the last 10 years, or in the last 5 years, so 1 client a year, depending on what it is that you're doing. Sometimes that could be a good thing, depending on the magnitude of the business that you do. If you're only able to do a certain amount, what makes you think that with this money, you can actually make more? This comes through very often if some of you watch, I'm hoping you guys watch Dragon's Den. This does come through quite a lot. When you are in front of those investors, they ask you these grilling questions and they say, okay, so why do you think you're going to be able to make X amount in the next 12 months when in the last 24 you've not even met target? You're actually running at a loss. Very important thing to examine. I spoke about this at nauseam earlier on. Financial discipline is a real thing. You should be able to track your record of budgeting. You should be able to save. You should be able to forecast. Very, very important. When you have your accountant in place, what he should do for you is to create a budget forecast for the year, right? Some of you, your years end in Feb and you start a new year in March. Some of you, your years end in March and you start your new year in April, and some end in June, and so it goes. Before you actually end your year, there should be enough information, right, to be able to create a forecast to say, in the next 12 months, this is where we need to be, this is how it's going to be, right? And I'm just going to check the time here. How are we doing? Good, doing well. And you need to be able to then show how you are actually going to be making the money that you're saying you're going to be making. If you are making a certain amount last year, what percentage are you going to be growing at in the following year? Very, very important. When you are actually making the money in some months, some businesses are seasonal. Are you saving enough for when the business is low, and that then enables you to pay for whatever expenses that you will still incur even if the business is not doing well? So that should actually come through. If you don't have a strategy, also, that's a very, very big problem. You don't have a plan of how the funds will be used or how your return on investment will be achieved. And that can really be a problem, right? You need to show that. Sometimes we go to the wrong funders, right? You go and talk to a DFI or an angel investor when you should actually be talking to a short-term funder for a PO, perhaps, right? Very often you need to look at the landscape and of funders, understand how they fund, what they're about, and approach the right funders so you minimize your rejections. Sometimes you are not at the stage that they would be funding. Maybe you're a startup, they don't do startups, they do people that are in the growth stage or maturity stage. Or maybe they only deal with people who are in the energy space and you are in manufacturing, not something that they do. Or maybe we're only looking at businesses in Gauteng. You are in the Free State, perhaps. Very often it's very important for you to understand and know about the funder you are approaching. So what do they look for, right? They want to know that your business is scalable, that when they put money into your business, you are not remaining stagnant, you are actually going to be gaining momentum. They want to know they also look for financial discipline, like I said before. They want to know that when the money comes in, the team is strong enough to just pick up the baton and run, and strong in the relevant functions that are required for the business. They also want to see traction and proof of concept, like I said before, right? And they want to know and understand what the money is going to be used for. Again, a question that is always asked on Dragon's Den. If we give you the money, what is it actually going to be doing? What are you going to use that money for? Very important for you to be understanding of that. What are the sources of funding? There are grants that does actually, with grants, you will find that you can get these from several sources. A lot of government bodies do this. I'm thinking of the MEF, some ESD, some corporate ESD projects also do this. So very important for you to have to look out for those. Angel investors, these can be individuals. Very often they are individuals who made lots of money in whatever it is that they've been doing, and when they find a business they want to invest in, they will often ask for equity. So something to consider if it's something that you want to give away. Venture capitalists also give away, they often are looking for equity, and very often venture capitalists would be established businesses that pool funds from different entities to then be able to lend to you as a business. DFI, like I mentioned before, the Development Finance Institution, they often will have a mixture of grants and loans. So we're talking about your NEF, your NYDA. If you're still blessed with being a youth, you can go there and they can give you a mixture of part loan and part what do you call it, grant. And the loan usually comes at a very low interest. So also a good place to go for funding. Banks and microfinance, I often call these guys the mashonisas. The interest rates can be really high. So you really need to be very, very careful. I recently was advising an SME, and when they came back to me, I won't mention the name of the institution, they wanted to borrow 300,000, and at the end of it, they'd be paying R500,000. I think it would be half to 600. No, actually, it was 600,000. So almost double, but compound because of the compounding interest and how if you default, this is what happens. It was really horrible. And usually, to their defense, they will loan to people that don't really have collateral they can work with. So their exposure is bigger, the risk is bigger. So you can understand why they would actually charge a much bigger interest. So very important for you to understand. So other people would go for just asking for a credit card from their business, from their business banker, an overdraft. Sometimes it can tide you over at times when you know you will need some extra cash, but you actually don't need a lot. That could also work, right? Crowdfunding. This can work, in communities where you've got certain cultures of people having a crowdfunding culture. And usually with crowdfunding, when you pay back, you'd have to pay back with interest, or you would look at giving away equity, right? A little bit like maybe listing something on a JSE or an alternative exchange. Right. Let's look at purchase order funding, right? How Why am I talking about purchase order funding? As I mentioned before, purchase order funding is something that is really quite sore with people. They really want to get ahead. Somewhere, just give me 50,000. I'll do what I need to do. I'll make 120. I'll give you back the 150. Sorry, the 50,000. But it doesn't quite work like that. So you need to always be aware that with purchase order funding, very often the interest rate is much higher. Also, depending on the industry you're from. So be very cognizant of that. There are government institutions that will fund you for a very reasonable interest rate. First one that comes to mind is CEDFA. It used to be CIFA, it's now CEDFA because it's joined with CEDA. So they do also have what they call bridging finance, which is very often a purchase order funding mechanism. So what do they need? They want you to produce management accounts. Very, very important. They need to understand also the history. They need to understand how you've been behaving. They need to understand how you what's the word how you what your relationship is with money, basically as a business, right? Very, very important. They want to understand your compliance, right? Compliance, compliance, compliance. They're not going to give money to someone who's going to do business and not be compliant. That's a definite no-no. Like I said, it could actually compromise their licenses, but also it will also compromise the chances of them getting their money paid back. SARS submissions are part of compliance, but I actually wanted to single it out because this is a sore point for a lot of businesses, right? Your pay as you earn, your UIF, your VAT, and all of that stuff. Now, if you're dealing with maybe a development finance institution, they do tend to forgive a lot of sins. So if you say, for example, you have fallen back with your VAT submissions or your pay as you earn, or whatever it is that you've fallen back with, you need to make an arrangement with SARS people. SARS does have the does give you an opportunity, a concession. SARS does understand that it's a difficult road to run a business, especially for SMEs. But what they won't tolerate is you completely ignoring the fact that you have an obligation to pay them. They would rather you come to them, you tell them, I'm sorry I've fallen back. Please, can I have an arrangement to pay X amount in the following 6 months? And if you have e-filing, you actually can do that online. It's just a simple case on getting onto your profile, make the application, and it gets granted or not. Please, please be aware. You get given 3 chances. The first chance, you make the arrangement, it gets approved, and then somewhere along the line, because life happens, you default, right? They'll give you another chance. You do the same, they'll give you a 3rd chance. After that, they are not talking to you. You would probably have to go into the branch, right? When you go into the branch, you really have to sell your story and why you're not able to pay but that decision takes all of 21 working days, not calendar days, working days, right? And that does compromise your position and your ability to produce some kind of an arrangement agreement so your funder can waive or give you the concession they need to give you. So please always bear that in mind. Your SARS submissions need to always be up to date, folks. And you also need to have a contract or a purchase order, as the name suggests, signed. It must be a signed one, right? And when we say signed, it must not only be signed by you, but it must be signed by both parties, right? If it's an official purchase order from a company, which doesn't require signing, it will show. It will be on a letterhead. It will have the details that are required. Most funders are very familiar with these. Then you're good to go. If it's a contract, very often a contract must be signed by both parties. Otherwise, it's not valid. Okay. Very often, that needs to be looked at very, very closely, right? What is it that can make you stand out, right? When you are pitching for funding, whether it is in person or in writing, there's certain things that will make a funder want to delve a bit deeper into what you have submitted, right? Always tell a compelling story. Prepare a good pitch and make sure that it checks out on all fronts, right? The pitch that I'm talking about is not only as you present it in person, a good pitch can also be on paper. Present yourself. When I say yourself, I'm talking about the business. Really present your business in a way that is compelling, in a way that you know if you were on the other side, you would want to fund. Obviously, you would want to fund because in this case, you probably are biased, but try to put yourself in the shoes of, if this money was mine and somebody was just coming in cold and they wanted me to fund them on a similar project, what is it that I would be asking for? What is it that I would be asking to see? Very, very important. And telling a story of where your idea came from, how it came about, how it actually was incubated, how it actually panned out, depending on who you are pitching to, whether it is an angel investor, whether it is an investor that looks after startups, whether it is an investor who looks after businesses in growth, in the growth stage, or even maturity stage. Even with a purchase order funder, right? You need to give a good pitch that says, this is how we operate, this is how we are making a difference in the market that we're in, and right now we need X amount of money to propel us forward, and this X amount of money is going to be used for XYZ, and we expect to be paying it back by this and that month. And this is how we are expecting to be paid. So all of these things really articulated well. When you tell that story, make sure that you back it up with numbers. Investors, being who they are, very often they will be gurus in investment finance. Others are just really good at what they do. They've done businesses, they've sold businesses, they've let go businesses, and so they know their craft, right? You're speaking to the converted. So just a story is not enough. You need to have numbers, right? Numbers, numbers, numbers. They say numbers don't lie. So if the numbers are telling a story, it must that story must actually be congruent with the pitch that you are giving, right? Have credible research data, right? I have underlined credible because a Google search is not enough, guys, right? And I've often heard a lot of people, and I think it's safe to say that we may have all experienced this. Google doesn't always tell you the truth, right? It's very limited data. Yes, it's got a whole lot of information, but test your research data. Research in areas that are credible. If you belong to a certain industry, there are industry journals that you can look at, industry bodies that you can solicit information from. Make sure that your data adds up and it's data that can stand the test of time. You don't want to be in a position where when you are questioned, you are actually not able to answer. You are not able to give a credible indication of how you actually came to the conclusion that you came to, right? It must be something that you must be aware of all the time. You must always know who you are actually pitching to. Who is on the other side? Who's going to be reading your pitch? Who is actually going to be listening to you? What do they want to hear? What are they primarily interested in? Be ready for the question with an answer before the question is actually asked. And often it's better to answer the question in your pitch before it is even asked. That will really impress your funder. It will really show them that you've thought about what you're about to present to them. Very, very important. And also something that I found is an issue with SMEs is that when someone has an idea, they have an understanding of how certain things should work, they are quite rigid and they refuse to be coached, and they are not responsive to criticism that comes back to them. What am I saying? I'm saying when you do have an idea, when you do actually get an understanding of what it is you want to pitch, try and bounce it off and test it with other people that you know will give you really good advice. When they give it to you, take it, right? Sometimes even the funders and the people you're pitching to will give you advice. They will make you see things that you actually haven't thought of. Don't be stubborn. Don't walk away and say, I know my business better. I know how this is going to work. Listen to me. No, listen to reason, because you will find that a lot of these people that are sitting on the other side have been around the corner many times. This is not their first rodeo. It's probably their 10th or their 100th rodeo, right? So they know the tricks of the game. They understand what could go wrong. And they say, please, when you are going through life, business life, don't wait to make all the mistakes yourself. Learn from other people's mistakes, right? And that's free advice. Take it. Right.